And this is Bloomberg Technology. Coming up, tech stocks nosedive, dragging the NASDAQ to the lowest levels this year. We'll map the sudden sell-off and the sharp slides. Plus, Theresa May's botched gambit, how the UK Prime Minister's move to secure a greater majority backfired, and the potential impact on her Brexit agenda. Plus, Apple's potential miss on the upcoming gigabit data revolution, why the latest iPhone may not satisfy customers' need for speed. First to our lead. After seeing massive gains this year, big tech stocks came crashing back down, posting the biggest losses in months. Shares of Apple, Microsoft, Amazon, and Facebook were some of the biggest decliners of the day. Mike Regan, our senior editor of Markets Live for Bloomberg, joins us now from New York. So, Mike, what exactly happened?
Well, as you mentioned, tech really has been on a tear this year. Depending on how you look at it, tech stocks in the S&P 500 or if you look at the NASDAQ 100, either way, up more than 20% coming into today. And if you overlay on that this notion of how popular factor investing has become among the quants on Wall Street. In other words, investors look for stocks with certain attributes, whether it be high sales growth, good valuations, momentum, that sort of thing. And tech this year has really been ticking off a lot of factor boxes. Obviously, growth. Many tech stocks are still considered growth stocks. Momentum, stocks that have a lot of momentum behind them. And even low volatility. Tech stocks have become very low, not very volatile compared to how they were in the past. And this morning, Goldman Sachs had a note out basically discussing all these issues and saying, look, there's risks here. They used a word that people hate to hear in investing, and that's crowded trade. They're saying a lot of funds are overweight these stocks, and tech has, because of these gains, has become just a massive part of the stock market. Almost a quarter of the S&P 500 is tech now. So for a mutual fund manager to be overweight tech means, you hold even more than that in your fund. So there's risks there. And one of the ones that Goldman Sachs pointed out is that, look, tech is not, it's sort of odd that tech is now considered a low volatility sector. Yeah, obviously, Amazon is an incredibly volatile stock. And they said that there's risks here of this overcrowded trade. And that's a word people just do not want to hear on Wall Street. You do not want to be in a crowded trade because when it unwinds, it tends to be sort of fast and furious like we saw today.
You've got Apple, Amazon, Alphabet, Facebook, Microsoft down across the board. Are there any specifics with regard to any of these particular companies that drove their particular losses? There
were a few. Now, it was obviously very much weakness across the sector. It was a rotation out of tech and into financials and banks. Part of that is because of President Trump. Obviously, there was no smoking gun in Comey's testimony yesterday. So that, going back to those factors, that makes people more optimistic about the value factor, which is stocks that tend to do better in sort of rising inflation, rising growth atmosphere, which potentially could happen with Trump's policies. And growth stocks are more for times of slow growth, low inflation. But that said, there were a few individual company news, pieces of news that definitely helped throw some gasoline on the fire. NVIDIA, for one. The short seller Andrew Left came out and said that the huge gains in NVIDIA this year are basically making it look like a casino stock. And this is a short seller that people really pay close attention to on Wall Street. When he speaks and mentions the name of a stock, people sell and ask questions later. They don't even wait to hear his rationale. Also, I would point to Bloomberg's story on Apple today saying that the upcoming iPhone will not be able to take advantage of the faster data download speeds that the telecom companies are working on. So that's possibly going to put it at a disadvantage to its competitors. So while it was mostly a sector rotation type of story, there was some negative news that, especially with the chip makers, NVIDIA weakness all across the chip maker sector. The Philadelphia Semiconductor Index was down more than 6% at the worst point of the day. Paired some of those losses, but they were very much the center of the selling.
NVIDIA, though, didn't recover. We're also going to be speaking with Mark Gurman, our Bloomberg News Apple reporter who wrote that story on Apple that you referenced. Mike Regan in New York with Bloomberg News. Thanks so much for that update. Now, in the UK, Theresa May is fighting to keep her job as Prime Minister after her Conservative Party lost the overall majority in Thursday's election. Facing calls from her own party to resign, May is working fast to try to push ahead her Brexit agenda.
I will now form a government that can provide certainty and lead Britain forward at this critical time for our country. This government will guide the country through the crucial Brexit talks that begin in just 10 days.
Bloomberg's Caroline Hyde joins us now from London to discuss the fallout. Caroline, it's been quite 24 hours. How likely is it that Theresa May will hold on to power?
Well, still the rumours are circulating, Emily, that maybe she will be ousted. Calls from her own party that she should be standing down, and that's why there was such a rush for consolidation after this, well, almighty blow, real embarrassment. The aim of this election, called 7 weeks ago, was to increase her majority in the Parliament and to increase her strength of argument and negotiating power at the table with the EU over Brexit. In fact, she lost both. She lost her majority. They lost some 12 seats to the Conservatives, and therefore we're now starting to see a question of quite how strong her negotiation tactics can be with Brexit. The reason behind that, Emily, is who she's had to turn to for help. To get back above the halfway line in Parliament, to be able to make any sort of laws in Parliament in the UK, she's had to team up with the DUP. That's a Northern Irish party, which they want a frictionless relationship with the rest of Ireland. That means, can she really push through any sort of a tough Brexit? Because, well, it seems as though she's going to have to see Ireland, part of the EU, easily trade with Northern Ireland. So it looks as though she's having to make these sorts of compromises. No wonder the circumstances are such confusion. And as we'll see there, May seeking permission to form a government happened today. Parliament reconvenes with the new MPs. She's already announced some of those in her cabinet. The same old faces, Philip Halleman, for example, to be Chancellor of the Exchequer. Then we have the state opening of Parliament June the 19th. June the 19th, Brexit talks start all over again. I just want to show you our terminal, WCRS. That is the world currency ranker. On my terminal at the moment, you'll see this is what happened to the market reaction. Pound currently down 1.6%. Big move, but maybe analysts thought it would be even worse.
So, Caroline, obviously the biggest tech companies have major operations in the UK. They've been setting up their own plans for Brexit. How has the scenario before them now changed?
Yet more uncertainty, because many had felt that this would, as I say, be a so-called hard Brexit. What I mean by that is that Theresa May said, look, I don't need your single market access, because what I really care about is my borders, about immigration, and I also really care about lawmaking being made in the UK and not by EU courts. But that means there's therefore not going to be perhaps that easy relationship with the new party she's had to strike a deal with, the DUP. So many people saying that she's going to have to step back from that so-called hard Brexit, that tough negotiation stance, and therefore go for a softer kind of relationship. In fact, those in Germany, thinking maybe a little bit of Schadenfreude here, if we use their term, they're rather pleased with the pain that the UK is currently seeing, because they see this as perhaps the voters, the electorate, starting to say, we don't like how hard the Conservative Party have been pushing this. We want to be able to trade easily with our #1 trading partner. And it's interesting, the market reaction on the back of perhaps a softer Brexit, because I'm going to take you to the terminal once again and look at a particular chart that I've got noted down. This shows you that, yes, the pound did particularly fall in the white line on G#BTV9262. The pound plummeting there, you'll see. But gilts, the bond market, hardly really shrugged it off. They seem to not be so worried. Many feel that that's because there's going to be a softer Brexit, a softer negotiation, and therefore, for the tech giants, maybe an easier trading relationship between the UK and the rest of the EU.
All right, Caroline Hyde in London, thank you so much for that update. Of course, we'll be watching what happens over the next 24, 48 hours. Coming up, anticipation is growing for the meeting between tech CEOs and the White House later this month. Will it bridge the gap between Silicon Valley and Washington? And Bloomberg Tech is live streaming on Twitter. Check us out at Bloomberg Tech TV, weekdays 5 p.m. in New York, 2 p.m. in San Francisco. This is Bloomberg. A story we are watching, Alibaba co-founder Jack Ma saw his fortune increase by $2.8 billion in just one day. Shares of the company rose more than 13% in Thursday trading thanks to a bullish sales forecast despite an economic slowdown in China. According to the Bloomberg Billionaires Index, Ma is now worth $41.8 billion, making him the 14th richest person in the world. Later this month, CEOs from Apple, Amazon, and Microsoft, just to name a few, will convene at the White House for the first meeting of the American Technology Council. The goal of the group is to modernize government services, quote unquote. Could this meeting help heal the rift between the Trump administration and the tech industry? We're joined now by Zachary, partner at CRV, and our guest host for the hour. So this meeting is with Jared Kushner, not with President Trump himself. But how optimistic are you about it?
That's a great question, Emily. You know, I'm not sure if I'm optimistic or not. I think one of the great things, though, is that these are leaders in cloud computing. And a lot of government services are based on old technology like mainframes and old personal computers. And cloud computing is the current standard and the future of computing. And I think that needs to be brought into the government.
You've got so many powerful people in technology in one room. What should be the priorities? What should be on the agenda?
I think what should be on the agenda is basically bringing cloud computing into all government services and bringing the topic of security into cloud computing.
And even though Silicon Valley was largely against Trump, do you think that it is the right thing that these tech leaders are engaging with the administration?
I don't think this should be viewed on a political level. I think this should be viewed as a technical advancement. Because without that advancement, our economy will lag.
Tim Cook, CEO of Apple, gave the commencement speech today at the Massachusetts Institute of Technology. He will be attending this meeting. And one of the things he covered in his speech today was the good and bad sides of technology. Take a listen to what he had to say.
Technology today is integral to almost all aspects of our lives. And most of the time, it's a force for good. And yet the potential adverse consequences are spreading faster and cutting deeper than ever before. Threats to our security, threats to our privacy, fake news, and social media that becomes antisocial. Sometimes the very technology that is meant to connect us divides us.
What do you make of that?
I think he's largely right. I think social media can fill some voids of information and data, and can connect us on things like sharing photos. But I think it can lead to the acceleration of misunderstanding. You
were one of the earliest Twitter investors.
Yes.
Do you ever have any concerns or guilt about that this you know, amazing but also monstrous thing that's been created?
Yes, I do.
In what way?
At the beginning of Twitter, I had a lot of excitement that I thought it could actually help bridge understanding. And at later stages of Twitter, and including now, I feel that it does help bridge, but it also actually can lead to misunderstanding amongst groups of people, where it leads to an echo chamber of people's own biases.
Is there a solution?
I think the solution is actually bringing people together in person. There's a lot of siloing of different beliefs and ideas online, and it is a difficult problem to solve. I'm not sure anyone has a solution currently.
CRV is launching a big new biotech fund, bioengineering. Why now, and why this?
This is the absolute right time to do it. There are new fundamental advances in artificial intelligence. And we've seen them accelerate over the last 3 years. And these advancements in artificial intelligence are being applied to biology. The big advantage of this is it can actually help the early detection of disease and heart disease and cancer. And this basically helps people's health. And that's tremendously exciting. Is
there any part of this that is consumer tech just not interesting right there? Are you not now? Are you not seeing opportunities there? Is that why you want to do this?
No, for me personally, I've always had a goal and a strong, deep purpose to help the individual. And I had a personal health scare, and that really isolated my own personal need to kind of keep helping the individual. And that basically showed me that the next level was to invert the system and bring power from the system to the individual. There was a book written called The Patient Will Now See You. So I believe that technology should be brought back and help the individual and actually help the overall system. And I think a lot of that will be brought by artificial intelligence and computational resources being applied to biology.
All right, George Zachary, partner at CRV. You are sticking with me for the hour. Thanks so much, George.
Thank you.
Coming up, why Apple's next iPhone could already be lagging behind its biggest smartphone competitors. Months ahead of its widely anticipated launch, we'll bring you the latest. Shares of Snap are inching closer to its IPO price. The stock fell in Friday's trading session. This after Citi downgraded it to neutral with a price target of $20 on concerns over user growth and a slowing pace of monetization. And Snap could face even more pressure on its stock when its IPO lockup period ends in July. Another stock under pressure is Apple, falling along with other big cap stocks, but shares turning lower in the session. Bloomberg reported that Apple's new iPhone, which goes on sale later this year, may not be as fast as its competitors. This could leave Apple in the vulnerable position of lagging behind the competition when it comes to data speed. For more now, we're joined by our Bloomberg tech reporter, Mark Gurman, who helped break this story, and still with us, George Zachary, partner at CRV. So, Mark, what exactly is at stake here?
Apple is going to be behind the speeds or the potential theoretical speeds that the Samsung Galaxy S8 will offer.
Why?
Well, the S8 phone and a few other latest phones, they offer support for gigabyte download speeds, which means basically 1,000 megabytes per second. You could download a movie theoretically in 2 to 5 seconds, which is very fast. And with this proliferation of AI and AR, the faster your iPhones can go, the better it is.
How much of a difference is there?
Well, theoretically, there's a huge difference, but in terms of real-world usage, people are not going to notice it right now. But over time, as these phones improve, they have new generations year after year, people will start to notice it as the networks improve.
What's at the heart of the issue? Is this a supplier thing?
Yeah, it's a supplier thing. So a couple of years ago, Apple started splitting up its modem suppliers, taking a portion from Qualcomm, which is very much known for modems, and Intel, which is usually known as a processor company for desktop and laptop computers. Now, the latest Qualcomm chips, which Apple will be using in the iPhone 8 and the other new iPhone models, they can support this faster speed. But the Intel chips, they can't support it. And Apple doesn't want to make some iPhone models faster than others, so it has to pare down the capabilities of the Qualcomm units to be the same as the Intel.
George, we're at a point where the smartphone market has become so competitive, and innovation, some people say is just simply so incremental. It's down to these very small details. How optimistic are you about Apple's iPhone future?
I think they keep having to find new innovations where it really matters to the user. New applications will make all the difference.
Does this one matter to the user?
The question is whether the applications will take advantage of it. I think downloading a movie slightly faster probably won't make a difference. So they'll fundamentally need to be new user applications that take advantage of it.
We've been also reporting on Andy Rubin's new Essential phone. Google's now in this market making the Pixels. Mark, how is the market different that Apple will be entering in September, which is when we believe the iPhone 8 will be unveiled?
It's a whole different ballgame, right? When the iPhone first came out, it was in a league of its own. Fast forward 5 years after that, it was basically Apple versus Samsung. Now, Samsung is as hot as ever with the S8. The Essential phone is coming out. They have this new Pixel phone from Google. Google will have their new one later in the year. And there's just a lot of new phones from Chinese makers coming out now that are getting really popular. OnePlus has a new phone coming out, Huawei, Xiaomi. So there's more at stake here. Will Apple really be affected by these players? It remains to be seen. I don't think so. But still, the landscape has shifted considerably.
George, Peter Thiel said that he believes innovation in smartphones is over. Would you agree with that?
I think maybe from Peter's perspective it is. I mean, Peter's always talking a big game about very large innovations, and I know that's what he's excited about. So probably from Peter's perspective, Peter's perspective is, hey, it's a little innovation, just like Peter had comments about Twitter about, it's just 140 characters.
What about George's perspective?
I do think there are innovations that are occurring, but from the user's perspective, they're not significant right now.
Mark?
Smartphone's at an interesting point. We're at an inflection point, and there needs to be this next new thing. A lot of people thought the smartwatch is the next thing. Clearly, it wasn't. Now it's going to be new platforms based on AI and AR. We'll see how far that takes us.
All right. Mark Gurman, Bloomberg Technology, thanks so much for that report. George Zachary, CRV, you're sticking with me. Coming up, we speak to the lawmaker who spearheaded the repeal of the FCC broadband privacy rules. Representative Marsha Blackburn joins us next to discuss her latest efforts on internet privacy. And if you like Bloomberg News, check us out on the radio. You can listen on the Bloomberg Radio app, Bloomberg.com, and in the U.S. on SiriusXM. This is Bloomberg.
I'm Elisa Parenti in Washington, and you're watching Bloomberg Technology. Let's start with a check of your first word news. President Trump will hold his first meeting as commander-in-chief with Russia's Vladimir Putin next month at the annual Group of 20 summit of leaders of major economies in Germany. That is according to an administration official who says Trump expects to meet with Putin during the July trip, which will include a stop in Warsaw. Trump welcomed the president of Romania today. Answering questions with the Romanian leader by his side, he said he will not allow congressional testimony by former FBI Director James Comey to derail his agenda.
No collusion, no obstruction. He's a leaker, but we want to get back to running our great country. Jobs, trade deficits, we want them to disappear fast. North Korea, big problem. Middle East, a big problem. So that's what I am focused on. That's what I have been focused on.
The president also says Comey lied in his Senate testimony and that he would be willing to testify under oath. Senior Russian lawmakers are dismissing Comey's congressional testimony as insignificant. The deputy of Russia's Duma says accusations of Russian interference in last year's U.S. presidential election are an attempt to worsen the relationship between Washington and Moscow. Prime Minister Theresa May has apologized to her Conservative Party after her failed electoral gamble to secure a greater majority in the UK Parliament.
I'm sorry for all those candidates and hard-working party workers who weren't successful, but also particularly sorry for those colleagues who were MPs and ministers who'd contributed so much to our country and who lost their seats and didn't deserve to lose their seats. And as I reflect on the results, I will reflect on what we need to do in the future to take the party forward.
May confirmed top 5 cabinet positions in her UK government will stay the same. That includes Philip Hammond. He will keep his job as Chancellor of the Exchequer, and Amber Rudd stays on as Home Secretary. Boris Johnson and Michael Fallon will remain on as Foreign and Defense Secretaries. Brexit Secretary David Davis will also retain his position, and talks to exit the EU are scheduled to begin in less than 2 weeks. Secretary of State Rex Tillerson is calling on Saudi Arabia, Egypt, and the UAE and Bahrain to ease their blockade on Qatar, which they accuse of funding extremist groups. Secretary Tillerson says the blockade has humanitarian consequences and hinders U.S. military efforts against Islamic State. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Elisa Parenti, and this is Bloomberg.
This is Bloomberg Technology. I'm Emily Chang. While the Dow set a record Friday, U.S. tech stocks took a big tumble, pushing the NASDAQ 100 index down over 2%. That index of mega-cap names having its worst week this year and the biggest decline relative to the Dow since 2008. Apple posting its worst day since April 2016, falling nearly 4%, while Microsoft and Amazon had their worst weeks since February. Overall, tech stocks, $8.6 billion of them were wiped out from the market in just today's session. Just a few weeks after Congress repealed Obama-era FCC broadband privacy rules, Republican lawmakers have introduced a bill that could restore some of those restrictions. It's been dubbed the Browser Act. The act seeks to ensure consumers have a say before a broadband company, a search engine, or a social network can sell their information to advertisers. The move comes after major backlash from consumer protection advocates and government officials who slammed the repeal of the FCC broadband privacy rules. Joining us now to discuss from Nashville, Tennessee, is U.S. Representative Marsha Blackburn, who introduced the Browser Act and chairs the House subcommittee that oversees the FCC. So, Representative Blackburn, your goal is to extend these new privacy rules, not just to ISPs, but to internet companies like Google and Facebook as well. Why didn't you then just broaden the privacy protections that were already on the books instead of wiping them off the books entirely first?
Well, Emily, a couple of points on that. First of all, we started working on the privacy issue about 5 years ago, and then we had a privacy working group that focused on this that went into place about 3 years ago. So this is something our committee has focused on for quite a period of time. Now, what we do know is with the FCC's action, they were trying to have two cops on the beat, if you will, and have one set of rules and regulations that were going to be overseen by the FCC and a second set of rules and regulations that would be overseen by the FTC. That was going to lead to confusion because the FCC would apply their rules to the ISPs. The FTC has been our nation's regulator in the broadband space since we have had a virtual space regulator. They're also the regulator in the private sector and the physical space. So we felt like it was important to simplify, to have one regulator and one set of rules. So the FCC rules had not been enacted. They had been passed, but not enacted. So it just made sense that you would kind of preserve the status quo, keep everything in place, get those rules that had not been activated off the books, and then move forward with having one set of regulations with one regulator, and that's exactly what we've done.
That said, if this follow-up bill doesn't pass, though, you end up having less privacy protections than you did in the first place.
No, what you would have is the way privacy has been. Bear in mind, the FCC rules had not been put into place. And what we do know is that consumers are saying, hey, look, we would really like to have the opportunity to opt in and decide if we want to have our information shared. And if you were to go out, Emily, and ask consumers, do you want more or less privacy in the virtual space? They're going to tell you that they want more privacy protections, and they want more tools in the toolbox to keep themselves and their children safe when they are online. And I think it's an important discussion for us to have, and it's important to look at since more people are conducting much of their transactional life online now.
Doesn't this concentrate power into the hands of too few very powerful companies already?
I don't think it does at all. I think what it does do is passing the Browser Act is going to make certain that everyone understands what the rules are. And you're going to have the one regulator with one set of rules. That's important. And then it is going to apply to the entire ecosystem. When someone logs onto their computer and they get in and they hit their browser, and up comes that page that is going to have their search engine, and they're going to begin to get into their different files. They're not thinking about there are different rules that apply to different components of interactions. What they want to know is that their information is safe, that their children are not being tracked, that they have the opportunity to choose to share information, whether it is financial information or health information or purchasing information. They want the ability to say, okay, I have a say in this game. So what we are seeking to do is to work with those that are in the entire ecosystem and say, let's beef up these privacy protections. Individuals that are satisfied, that know the environment is secure, they're going to be better consumers and they're going to be happier with the vendors.
Representative Blackburn, when former FBI Director James Comey was fired, you had strong words for him. You said he had breached trust, that he had politicized the office. I'm curious what your reaction is to his testimony.
Yeah, I think that it is easy to look at the testimony yesterday and say, my goodness, questions were raised. I felt that what he did do was go after everybody. He went after Attorney General Lynch a little bit, Secretary Clinton a little bit. He went after the president, and he showed that he was very political. I was disappointed to hear him say that he didn't have the strength to stand up or was disappointed in some of his actions. I would have thought that he would have been more in command and more in charge. But the good thing is he had the opportunity to have his say and give his side of the story. We all know there's always two sides to every story. This was his recount of his recollections, and we'll see what the Senate Intel Committee and the House Intel Committee will do with these further comments that came forward yesterday.
All right, U.S. Representative Marsha Blackburn, thank you so much for joining us. Well, Pandora has put to rest talk of an outright sale. For now, the internet radio company has sold a 19% stake in SiriusXM to SiriusXM for $480 million. As part of the deal, Sirius will get 3 seats on the board, including the chair position. In a separate transaction, Pandora sold its concert ticketing business, Ticketfly, to Eventbrite for $200 million. The company is under pressure to adjust the changing music industry landscape as it competes against Spotify and Apple Music. Coming up, think of it as YouTube meets Amazon. We'll hear from former Hulu CTO and current Kleiner Perkins partner Eric Feng about his latest venture that marries unboxing videos with e-commerce. That is next. Airbnb has just cleared a major hurdle in Japan. The Japanese government has approved legislation that legalizes its service and others like it in the country. The law will allow homeowners to let out their property to paying guests for up to 180 days a year. Airbnb, which is valued at $31 billion, has found a more receptive audience in Japan compared to some cities in the United States, including New York and San Francisco. A tourism boom has cut into Japan's supply of available hotel rooms and helped make the island nation Airbnb's fastest growing market. The former CTO of Hulu, Eric Feng, has big plans to change how millennials shop. Feng has now founded Packaged, which is angling to use popular YouTube videos to sell merchandise in a format similar to old-school home shopping cable networks. I caught up with Feng, who is also a general partner at Kleiner Perkins, and asked him to lay out the details in his latest venture.
It's a new take at video e-commerce. Think of it as a reimagination of QVC or Home Shopping Network and trying to drive transactions through video content. And it's actually based on a huge phenomenon that we're seeing on YouTube, which is the popularity of unboxing videos.
Talk to me about unboxing videos and how they came out of nowhere.
Well, you have kids, so your kids are going to be watching unboxing videos day and night pretty soon. You're right, it just exploded, this phenomenon. It got going first in 2010, but it really started as product enthusiasts showing their first reactions of using a product, demoing it, having a tutorial, having an explanation about the product. And it's really evolved to be about every category out there, not just toys, but beauty, electronics, food. Every category now, there are a huge, vibrant group of creators making video content about that category.
Now, YouTube is obviously a big player here, but what about Amazon? Are you taking on Amazon here?
You know, really interesting. This week, Amazon shut down their video commerce program. It was a show called Style Code Live, and they closed it down. And anyone in commerce, doing anything in commerce, is taking on Amazon in some way, shape, or form. But we feel like we're doing something very different than what Amazon is doing, which is Amazon is so focused on the pure utility of shopping. They want to minimize the least amount of time, the least amount of pages that you interact with before you buy something. With our startup at Unbox, we want to have the complete opposite KPI. We want you to just hang out and get entertained by our video content and just enjoy the products that we bring to you. And if by chance along that adventure you end up purchasing something, fantastic. But as long as you're entertained, that was the key for us. And I think that's something that Amazon isn't focused on. They're not focused on the entertainment, the discovery, the serendipity of shopping anymore.
You're a partner at Kleiner Perkins, incubating a company on the side. How does that work? How do you split your time?
Poorly. So right now I spend about 2 days a week on packaged and 3 days a week as a partner at Kleiner Perkins, focused on early stage consumer investing. And it's been a lot of fun. Luckily at this early stage, both Kleiner Perkins and the startup, I think, mutually benefit from the relationship. So I can bring interesting trends and learnings that we're seeing as we're building this company back to Kleiner. For example, last year I was at VidCon, I was at Playlist Live, I learned a lot about the creator ecosystem, I learned a lot about e-commerce, and I brought those learnings back to the partnership. And similarly, we get to see a lot of cool company ideas, and I can bring some of the best practices back to our startup. For example, we learned a lot about leveraging influencers to scale, to get distribution, as opposed to just leveraging traditional ad networks. So that's something that we're exploring with at Packaged.
Kleiner Perkins has, historically had some issues with its reputation. How do you feel that's evolving? Do you feel Kleiner is back to being a firm where entrepreneurs want their money?
Well, I think this is a challenge of all venture capital firms right now, which is that capital in our industry is necessary but no longer sufficient. As an investor, when I put my investor hat on, I spend all my day actually trying to sell money. I try to sell money to people.
You're trying to get entrepreneurs to take your money.
Yes, I am selling them money. I'm saying, please take my money. Here are the reasons why you should take my money, because entrepreneurs now have so many choices about where they can get funded. So reputation alone isn't enough. Pedigree alone isn't enough. We have to work much, much harder to convince entrepreneurs that it's the right partnership, it's the right decision for their company. And a lot of that comes down to just chemistry and selling the values of the individual as the eventual board sponsor of that company, and also the value of the partnership. And I think that that's something that we uniquely bring at Kleiner. Venture
capitalists have raised a historic amount of money. Is there enough places to put this money? Or are we on the verge of a bubble?
That's a question that we've struggled with a lot. What we can say definitively is that there is still so much interest in this asset class. There's tremendous interest from LPs wanting to invest more capital into venture capital firms, because I think the VC industry delivers something that's actually kind of hard to get, which is extreme beta. In a lot of other industries, you can invest $1 and make $2 or $3 or maybe $4. But venture capital is one of those unique places where you could put $1 and potentially make $100 or $1,000.
But are there enough cool companies? Are there enough new technologies being invented?
That's definitely the challenge. I think we are potentially in between innovation waves. So in the fullness of time, the answer is absolutely unequivocally yes. There will be the next Facebook. There will be the next Google. It will happen, but a lot of it is about timing. Right now, it seems that we might be in a bit of an innovation transition between one wave, which was mobile, onto the next wave, which is not sure what it will be. So it does create opportunities for investors like myself to focus a lot of our time on things like incubations, on things like getting deeply, deeply involved with companies and maybe building them from the ground up.
If we're in between innovation waves, what does that mean for valuations? Like, what do you see, what trends do you see playing out over the next year, let's say?
Well, I think that the great companies will still achieve whatever valuations they want. They set the price of their company because they have fantastic business models that are working. Airbnb, Pinterest, and so forth. So I don't see any slowdown in those companies. I think what we do see is that there will be less speculative investing. You can't grow just purely on GMV. You can't grow purely just on user acquisition that you're paying for. You can't just continue to spend to grow anymore. You have to be a little bit more pragmatic. And overall, I think that's a good thing.
Kleiner's an investor in Uber. With all of the issues that Uber is facing, is it still worth $70 billion?
Well, my favorite stat about Uber is that in the United States, every single day, in the United States. There's about 1 billion rides that are taken, whether it's private transportation or public transportation, but 1 billion point-to-point rides that happen in the United States every single day, one country alone. Uber has about 1 million rides. So do the math. It's a tiny fraction of the overall transportation market. So it's amazing what happens with the laws of large numbers, and I think that the category is so valuable, and Uber is a leader in the category right now.
And to clarify, Packaged is planning to coast off the phenomenon of unboxing videos that have become popular on YouTube by making its own. That was Eric Feng, founder of Packaged and general partner at Kleiner Perkins. Coming up, Masayoshi Son picks up his second venture into robotics, why Alphabet let go of Boston Dynamics and SoftBank scored. This is Bloomberg. After an almost 3-year boycott, Taylor Swift has returned to Spotify. Swift's entire catalog became available at midnight New York time on Thursday night. None of the songs had been available on Spotify, the world's largest paid streaming service, since November 2014. Since Swift abandoned the service, Spotify's growth has surged, more than 50 million paying subscribers as of March. And the company pays out billions of dollars to the music industry. SoftBank is taking over Google parent Alphabet's robot dreams, buying Boston Dynamics to pursue a future when more machines intermingle with humans. Alphabet decided to put the company up for sale earlier this year because it didn't anticipate a marketable product in the next few years. It's still unclear whether Boston Dynamics will remain within SoftBank or become part of the Vision Fund, its massive, nearly $100 billion fund. Joining us now with more, Bloomberg Tech, Selena Wang, and still with us, George Zachary, partner at CRV and my guest host for the hour. So, Selena, why is SoftBank buying this company?
So Google's been trying to get rid of this company for quite some time, and for them, they really needed a marketable product in the near future. Now, SoftBank doesn't have that kind of pressure. It has a ton of cash. Masa said before that he's trying to create a 300-year plan. So there's plenty of time for a company like Boston Robotics to come up with their go-to-market strategy.
But how does this fit into SoftBank's strategy and what SoftBank actually does?
This actually isn't SoftBank's first robotic product. A few years ago, they acquired a French company, a robotics company, and they unveiled Pepper a few years later. And it's a sort of humanoid robot that's supposed to read emotion, is supposed to be social. It hasn't done that well in the market. There's some 10,000 out there in the market now, mostly in Japan. So we don't know if the team at Boston Dynamics is going to be folded into that, if it's going to fit into these Pepper ambitions, or if it's going to be something separate. But it's not completely out of the blue for SoftBank.
George, what do you make of this?
I'm not surprised at all. SoftBank is looking to build its portfolio in robotics. I see them looking to invest in robotic startups across the entire valley. I know that Google was looking to part with it, and Google's just looking to basically focus in artificial intelligence, just like we are looking to focus in artificial intelligence and healthcare by investing in Freenome, our portfolio company. So it makes sense that SoftBank will be doing this.
The fact that they've raised almost $100 billion, how does that change the competitive landscape in VC, as a VC yourself?
I don't see them investing in very early stage companies. I see them basically making later stage investments.
Could they, though, contribute to a blowing up bubble? A bubble that might be forming by supporting companies that maybe shouldn't be supported?
Well, I think there is already a blowing up bubble, and everyone's contributing to it.
I think it's interesting to hear your perspective. I've talked to some investors who are maybe not so lax in their response. They're a little frustrated that SoftBank's making such large investments, that it's kind of like the tourist investors that came in a few years ago, the hedge funds, the mutual funds, and that things were finally starting to calm down. And now SoftBank's here with $100 billion, and it's making everything complicated all over again. Are you seeing that at all?
I'm seeing it. I'm seeing it at the later stages of my companies and other companies, and they kind of show up and they say, hey, we're interested in what your company's doing. Can you talk to us about it? And they do some talking, and then they talk about doing some investing, but they're doing a lot of scanning of the ecosystem. So they're gathering a lot of information.
Interesting.
So they're definitely paying attention to the entire world of robotics.
We will see where they place other bets. George Zachary, Charles River Ventures, thanks so much for joining us. Selena Wang, our Bloomberg Tech reporter, thank you as well. And that does it for this edition of Bloomberg Technology. All episodes, of course, live streaming on Twitter. Check us out at Bloomberg Tech TV, weekdays, 5 p.m. in New York, 2 p.m. in San Francisco.